Hello and welcome to this week's episode of The Capitalist Investor. As always, you have me, Diamond Hands D, and Cool Hand Luke. What's going on?
What up? I survived the Indy 500.
Oh, did you go to the Indy 500?
Yeah.
Oh, that's fantastic.
I didn't have any beverages this year, and it was actually really cool to watch the race and enjoy the race instead of going like to the snake pit, down. I don't know if you know how it operates, but like, the big party down in the field, and then we have all kinds of other things going on. So it was nice just sit in the bleachers, watch 200 laps go round and round, and there was the most yellow flags since 2000, I believe, 17. So 8 like accidents, crashes, pretty crazy stuff. I think 60 laps were under the yellow flag, so only 140 were actually raced.
Yep.
So pretty crazy.
Those races are extremely entertaining. I'm certainly not I don't really know what's going on, but I see like the F1.
Yep.
And apparently it's like super boring and no one passes anyone. And the Indy cars, there's a bunch of changes.
They're like going crazy. Yeah.
They're going 230 miles an hour.
That's what I was going to say. 225 was like the average speed, like when they were actually rocking. Like that's insane, dude. Like 224, 225 miles per hour. And just hearing the sound, the roar of the engines when they pass by, dude, it's exhilarating.
Yep. Yeah, I've always wanted to go to that, but I've always wanted to go to like a NASCAR race too.
Yep.
Like one of the big ones. I don't know anything about it, but it just looks like a good time.
One day we got to go, man. We'll
run an RV.
Well, yeah.
We'll
wear our tank tops and we'll throw in some chaws.
Absolutely.
We'll fit right in.
All right. Well, I think there's really only one thing that we can talk about this week, and that's Nvidia. So just basically blowing out every single number out there. Their market cap is approaching Apple's, I believe, and
it's like $200 billion away. That's it. Well, I say that's it. $200 billion away, but like it's really not.
Yep. And they just are selling those chips as fast as they can build them. Everybody wants them.
They can't build them. Yeah.
Yeah, they can't meet demand, and they're just crushing every number out there.
So would you be buying Nvidia at $1,100 a share at $2.7 trillion market cap?
It's I'm going to say no, and that's really only because I said no at $950. It does seem crazy. The valuation seems crazy. However, at the same point in time, they seem to be essentially the only game in town, really, for that one specific function. No one else really can deliver what they're doing right now, and they just blow out every single number that they report on, really. Revenue, just some percentages for context. Year on year, their revenue is up 262%. Their net income is up 628%. And their net profit margin is doubled. It's up 101%. They're beating earnings per share and revenue every single quarter, just blowing it out of the water. So yeah, it is a juggernaut. It's hard to sit here and say, hey, I would bet against it. But at the same point in time, who knows where it could run from here, honestly.
I'm going to get in trouble for saying this.
All right, well, let's hear it.
I think long-term, I'm not talking this year, next year, or even 2 years down the road. Long-term, Nvidia could be one of the biggest bubbles, I think, that will go down as one of the biggest bubbles in history. And the reason I say that, hear me out. I'm not saying I know technology a lot, but like I'm being young, I've been around it my whole life. There's was it Moore's Law? I think it is the concept or something like that, where technology doubles every like year and exponentially. But also there's also another concept, another law / theory, if you want to call it, that there's only so much technology you can fit on like a singular chip, right? There's only so much density you can have through the silicon and the materials that are used to build the chip. So you basically, there's like a opposite of exponential, like have you ever seen like the logarithmic lines where they like curve over the opposite of exponential, and they like flatten out. We're essentially like, I think, close to that point with our technology cycle with these chips. Like, we have to essentially create and find a new material. We have to create a new like element on the elemental table to pack more density and allow the electrical units information to flow on these chips, right? So my thinking is in long-term concern with these chips, specifically with Nvidia, is if we are flattening out from the technology cycle where there's only so much technology we can fit on these chips, what's the incentive or what's the reason that companies would go out there and continue to buy more chips 10 years down the road when there's really not much? Look at iPhones. Like, let's just use that for example, like these cell phones that we have in today's world. Who buys the next new generation? If you bought one this year, why would you really buy the next version next year? There's really not too much new on those cell phones, right? When it comes to cameras or technology, like these are even kind of flattening out from the technology cycle side of things. So like the chips are the same way. Once the people get these chips and are able to run the AI, run the cloud, run the servers, they might not upgrade every single year. They might have to wait a couple years because it gets really expensive, number one, to buy new chips every single year. But also it's like, what's the point when the technology isn't that much greater?
Yep. Yep. Very interesting to think about, really. And, I think what's also going to come from this revolution or whatever you want to call it, I'm going to forget off the top of my head, but the amount of energy that it takes to run the processes, like if you ask Chat GPT a question, the amount of energy that takes is, again, I don't know the exact number, but it's exponentially more than a regular Google search, for example. So it's really going to change the face of everything. If we need devices that can power that type of computation, that again, battery technology, right? That's an ever changing thing, and it's going to be a big byproduct, I think, of this overall technology cycle is how all of this stuff is going to get powered and how it's actually going to get used kind of in the mainstream. Yep. I think it's still kind of on the fringes right now. So, there's obviously the valuation is kind of scary, but at the same point in time, the runway and the potential, it seems to be, I don't want to say unlimited, but it seems to be, up and to the right for sure.
I think as of now, I don't think there's any kind of crash to be concerned about. I said this on Stu's show like a week ago before they reported. I was a little bit, I guess, wrong because it's up like 10% since I was on. Went from like 950 to like 1100, like you said now. Mm-hmm. So it's up like 13%. But I said, listen, I think they're going to rock the reports. They're going to knock it out of the park, home runs. Probably long term, this goes to maybe $1,500 a share. Mm-hmm. But in the short term, most of it's priced in. You're probably going to see a small positive reaction. And frankly, that's kind of what we saw, a small positive reaction. Now, small is relative. I was thinking more like a 4 or 5 or 6% gain after earnings. I think it's closer probably to 10 to 12%. Yep. So it's a little bit more, I guess, than small. But I think that's going to be the name of the game. They're going to continue to knock it out of the park for the next couple quarters, and you'll probably see some small positive reactions. Nothing too crazy to the downside, probably nothing too crazy to the upside. You can't move a $2.7 trillion stock. Mm-hmm. Large amounts.
Right.
You just can't.
Yep. All right. Well, something that obviously is driving the market, something that we've been talking about for a while now, but it seems to be the new name of the game in town.
If I was a trader, if my day job was to actually look at the markets, try to look at daily opportunities and try to make money in my personal account or something like that, and that's not my job, I would look to probably sell options on each side. I think the volatility that's priced in, I think it's like 10 or 15% month out volatility priced in Nvidia.
Yep.
I would sell calls and I would sell puts and I would collect the premiums in between because I think that Nvidia probably is not going to move very much it's probably gonna be pretty sideways.
Right.
That's what I would do right now if I was a trader. Collect the 15% premium on each side and just pocket that premium and change as income.
Yep, I like it. I like that a lot, and that with again such a large valuation, kind of a longer term sideways, volatile sideways move seems to be kind of what's in store. But
it's called what I think a straddle. The option strategy is called a straddle because the only way you lose money is if it's outside of the range of that 15%.
Yeah. All right. Well. Thanks for listening to this episode. If you guys have any questions, comments, or concerns, hit us up at info@swpconnect, and we'll talk to you next time.
The opinions expressed in the podcast are for general informational purposes only and are not intended to provide specific advice or recommendations for any investment, legal, financial, or tax strategy. It is only intended to provide education about the financial industry. Please consult a qualified professional about your individual needs.